Welcome back to Explain the Charts. Today we are taking a look at Google stock, and we're going to analyze the current news impacting the stock and dive deep into the charts to see what we can glean from the price action. The most recent headline is that Google's parent company, Alphabet, is set to report its third-quarter earnings on Tuesday. Analysts expect a strong earnings report, with analysts predicting earnings per share of $1.84, up 19% from the previous year. Revenue is expected to increase by 13% to $86.4 billion, with cloud computing revenue specifically anticipated to rise 29% to $10.87 billion. However, there is a cautious tone surrounding the stock due to the ongoing antitrust trials. The Department of Justice is pursuing antitrust lawsuits against Google, which could have a long-term impact on the company's business. Analysts are watching these trials closely to see how they might affect Google's future growth. Google's core internet search business faces challenges from generative AI. OpenAI's new LLM poses a threat to Google's dominance in the search space. Google is responding by developing its own generative AI tools and making them available to software developers. Despite these challenges, Google's Performance Max advertising platform is performing well. This platform automates buying across multiple platforms, including YouTube, Internet Search, Display, Gmail, Maps, and others. This could potentially help Google overcome the challenges posed by generative AI. Google's hardware business is facing competition from Apple in smartphones. Google is aiming to slow down the growth of TikTok with its own short video platform, which could impact its future revenue. Google's cloud computing unit remains the third-largest service provider behind Amazon and Microsoft. Google's acquisition of cybersecurity firm Mandiant in 2022 seems to be paying off. Alphabet's other bets and moonshots are areas that investors should monitor closely for new developments. These ventures are currently money-losing, but they have the potential to become significant revenue streams. Looking at the daily chart, we see that Google has been in a strong upward trend over the past several months. The stock has broken out of a consolidation pattern and is now trading at new highs. The stock has shown strong momentum and has closed above its 200-day moving average, a key technical indicator that suggests a bullish trend. The recent earnings release, coupled with the positive outlook for Google's cloud computing business, may drive the stock higher. However, the antitrust trials and challenges in the search space could pose a risk to the stock's upward trajectory. Let's zoom in on the past few weeks of price action on the daily chart. We can see that the stock has formed a bullish flag pattern. This pattern typically indicates a continuation of the upward trend after a brief consolidation period. The flagpole of the pattern is the initial upward surge in price, while the flag is the subsequent consolidation. The breakout of the flag is a bullish signal, suggesting that the upward trend is likely to resume. Looking at the 1-hour chart, we can see that the stock has been consolidating in a range between $160 and $166 for the past few days. The stock has been trading within this range, with neither bulls nor bears gaining a clear upper hand. This consolidation could be a healthy pause before the stock continues its upward trend. However, it could also signal a potential reversal if the stock breaks down below the support level of $160. Let's look at the last 4 hours of price action on the 1-hour chart. We can see that the stock has been trading above its 50-period moving average, which suggests a short-term bullish trend. The stock has also broken out of a bearish flag pattern, which is a bullish signal. The flagpole of this pattern was the initial decline in price, while the flag is the subsequent consolidation. The breakout above the flag is a sign that the downward trend has ended and that the stock may now rise. This is further supported by the fact that the stock closed above its 50-period moving average. The 15-minute chart is showing a more volatile picture, but the stock has been trending upwards over the last few hours. The stock has broken out of a short-term consolidation pattern and has closed above its 20-period moving average, which suggests a short-term bullish trend. However, the stock is still below its 50-period moving average, which suggests that the bulls are not in complete control yet. Looking at the 15-minute chart, we see that the stock has been making a series of higher highs and higher lows. This suggests that the bulls are in control and that the stock may be poised for a further upward move. We also see that the stock has closed above its 20-period moving average, which suggests a short-term bullish trend. However, the stock is still below its 50-period moving average, which suggests that the bulls are not in complete control yet. The key support level to watch on the 1-hour chart is $160. If the stock breaks below this level, it could signal a bearish reversal. The key resistance level to watch on the 1-hour chart is $166. If the stock breaks above this level, it could signal a breakout to new highs. On the daily chart, the key support level to watch is the 200-day moving average. The stock has been trading above this level for several months, and a break below it could signal a bearish reversal. The key resistance level to watch on the daily chart is the previous high. The stock has broken out of its previous consolidation pattern and is now trading at new highs. A break above the previous high could signal a strong continuation of the upward trend. If the stock breaks above the resistance level, it could signal a strong continuation of the upward trend. On the 15-minute chart, the key support level to watch is the 20-period moving average. The stock has been trading above this level for the past few hours, and a break below it could signal a short-term bearish reversal. The key resistance level to watch on the 15-minute chart is the previous high. The stock has broken out of its previous consolidation pattern and is now trading at new highs. A break above the previous high could signal a short-term continuation of the upward trend. In conclusion, Google appears to be in a bullish trend, but there are some risks to consider. The stock is approaching a crucial earnings report, and the outcome of the antitrust trials could significantly impact the stock's future. The stock is currently consolidating in a range on the 1-hour chart, but it has shown bullish signs on the daily and 15-minute charts. Watch the key support and resistance levels closely, and monitor the news for any potential catalysts that could move the stock higher or lower.